Let's look at the impact of some theory on product costing, specifically the qualitative characteristic of relevance. So relevance says we should include any cost or allocate any product cost that will influence our decision making. So I guess what we want to ask ourselves with each of these costs is, will allocating the cost better help management identify the actual cost of sales? And then will that amount then help us figure out how much to sell it for? And a part of that is going to be what we call the materiality test. So what we should do is really only include anything that's going to be large enough or material to influence our decision making. So include things that will influence decision making, they're called material costs. And why don't we exclude anything that's immaterial or not big enough to influence our decision making? So let's have a look at an example here. We've got business A applies a markup of 100%, has the following costs. We've got the purchase price, so that's a product cost, $20 per unit. Got advertising, $1,000 per month. Not required to get stock ready for sale. I'm going to call that another expense. Got the customs duty, $5 per unit. Required to get stock ready for sale, can be allocated per unit, product cost. Buying expenses, $400, required to sell stock but can't be allocated, so that's a period cost. Cartage inwards, $100 for 200 units. Is it required to sell stock? It is. Can it be allocated? It can. We've got $100 for 200 units. That's actually 50 cents per unit. So I'm going to put that in as a product cost of 50 cents. So what we've ended up with here is a total product cost of $25.50. Now, if we're applying a markup of 100%, business A is going to sell these for $51. Let's look at business B. Business B is actually going to have the exact same costs, identical. So we've got purchase price, $20 per unit, product cost. We've got advertising, $1,000, other expense. We've got customs duty, $5 per unit, that was a product cost. We had the buying expenses, couldn't allocate them, so they were a period cost. And then we had this one, cartage inwards, $100 for 100 units. Now, business A did allocate that. They said over here, put that in as a product cost. So that could be logically allocated. Business B could do that, but they're not going to. What they're going to do is actually leave it out and just call it a period cost. Okay, so what we've done is we've put it here instead. Okay, and what we're end up with is product cost of only $25 per unit, and that ended up with a markup of 100%, which means their selling price is $50. So let's just have a look at that in summary. By the time we got to the cartage inwards, business A had product cost of $25, which meant the selling price was $50. Business B had product cost of $25, which meant the selling price was $50. Now, how do we treat the cartage inwards? $100 for 200 units. Business A called it a product cost of 50 cents. Business B called it a period cost, so it didn't attach itself to the cost of the stock at all. That meant when we sold it, business A ended up with an extra $1 on top of its sale price. So where'd that dollar come from? Well, we doubled this. Okay, and then we added that to the 50, and that gave us a total of 51. But business B didn't add it in. So if it didn't call it a product cost, that meant the actual impact on the selling price was 0. So if the selling price was already 50 and we called it a period cost and didn't allocate it, well, the final selling price would be $50. Long story short, we've ended up with one business selling it for 51, one business selling it for 50. So has business B made a mistake by not including this? Well, it depends on your definition of material. Do you think the extra $1 is relevant and big enough to influence decision making? That's up for the business owner to decide. Business A did think it was material, clearly, because they've allocated it. That business owner is of the opinion that 50 cents per unit is relevant. This business owner here obviously thinks 50 cents is not material, so they've excluded it.